Okay, let's look at some of the other accounts. What about the fixed assets? Do we need to compare those to an outside source? Are they significant? Are they material? Yes, they are material. If your books say that there's $50,000 in the fixed assets, should you know if that $50,000 is correct or not? Yes. Yes. Now, how do we know if it's right? If it's on our books, if it's included in that $50,000, what does that mean? It means we've got something that's a fixed asset and that we still have it, right? Because if we don't have it, it shouldn't be in there. So in order to know if that number is correct, we need to have a list of fixed assets. If you will turn to page 1.52, you'll see a sample of a property, plant, and equipment record. Now, these records you can buy at an office supply store. You can make them on 3x5 cards. You can do this in a computer. You don't have to keep it on a sheet of paper. I kind of like using cards because you can move them between files very readily and easily, okay? And there's a reason for that. This information that you capture on property, plant, and equipment has to be maintained for the life of the equipment and then 7 years beyond, okay? So when you keep it in a computer, just in a database, it's too easy just to delete it and forget about it. Whereas if you keep it on a card, you can move it between files and it will be there. And then after 7 years, after its disposal, you can just throw it away. But it's up to you how you want to maintain that. I just want to show you the type of information that's provided. Now, first of all, let's review what is a fixed asset. Remember that there are 4 characteristics for a fixed asset. What are they? Tangible. Not inventory, meaning we're going to use it, not sell it. Material and value, meaning greater than $500. And expected life, very good. Expected life greater than a year, okay? Now that means, particularly the materiality issue, we're not dealing with the little staplers and the tape dispensers on the desk. We're dealing with the more expensive stuff. Okay, so you might only have 5 or 10 things in the entire fixed asset account, and some of them might be $10,000 or $20,000 company cars. Okay, those don't get lost very easily, and when they're gone, the owner knows about it. So hopefully the maintenance on this is going to be minimal. Okay, in keeping it. But every time you buy a fixed asset, every time you make an entry into a fixed asset account, you need to create a record or card, or in the computer, a listing, whatever, of what you bought. So that at any time, you can tell anybody that asks, that should know, what makes up that balance of $30,000 in the furniture and fixtures account, or in the automobile account, whatever that is, okay? And that property, plant, and equipment record does a good job. Now let's look at the components. We have an item. In this particular case, it's a desk and chair, okay? We bought it new, age when acquired, new. Estimated life for furniture is 7 years, so that's what we're going to utilize here. Remember, we went through those depreciable lives earlier on. Okay, we bought it on January 2nd, correct? And then we gave a description of it. It just says executive mahogany, you know, I mean, it's a description. And we even put numbers in there. Now, the reason why is because what if we buy another executive mahogany desk? How are we going to differentiate that from this one? So we're going to write 101 on a little tag. It doesn't have to be fancy, and hide it somewhere underneath that desk so that we can always know which desk this card applies to. Okay? Now, can this be a significant amount of effort for a big company? Oh, yeah. And so they have accountants that just deal with fixed asset numbers and things like that. And that might be their full-time job, is just dealing with this type of record keeping. So those, what we call property, plant, and equipment numbers assigned to the item become very important to them so they can differentiate. Now, the cost of this desk and chair is $2,100. By the way, this cost will include all freight. It will include sales tax paid. It will include even installation costs. If we had to, do some special wiring to put it in, then it will include that as well. So all those costs will be included in that particular cost that goes to the fixed asset account. Okay, let's look at what else is down below there. In fact, there's only one box that I want to identify. Below the amount, there is a box that says depreciation, and then it says SL. What do you think SL stands for? Straight line. Okay, now that's the most common used. We could have used another method. Which other method could we have used if we wanted to? Double declining balance. We could have used that method. Okay, but typically we're going to use straight line method. Could we have used units of output here? Why not? Because there's no unit of production. The desk is just sitting there, okay? So it's just time. It's going to depreciate over time, okay? Now, to the right side or the right half of this card, we have the depreciation schedule. We have to calculate that. We have to keep up with that, okay? And so we have several columns. The year, 96, we depreciated it a whole year. So how much did we depreciate it in 96? $300. We had it in January, so each month we just depreciated it $25, and then at the end of the year we had, $300 in there. Next year we had it for the whole year. Next year we had it for the whole year, and so on and so on. Finally, July 1st, I think it was, or July 4th, we sold it to Jim Smith for $500. What was the book value at that time? $1,050. So did we have a profit or a loss? We had a loss of $550. Do you see where all that information came from? Pretty simple, okay? This, you could have had anybody do this or keep track of, but it's just a little bit tedious. It has to be done.